Hi, it's Ty the Real Estate Guy, and today's video is going to focus on real estate for beginners, where I'll cover the basic information everyone should know before they get into real estate. By the way, if this is your first time to my channel, you'll want to hit the subscribe button below and ring that little bell to stay up to date on the latest real estate tips and trends. Did you know that owning real estate is one of the safest and easiest ways to become a millionaire? It's true. In this video, I'll go over what you need to know to start buying homes, which will put you on the path to becoming a real estate tycoon, or at least financial independence. Just so you know, I own multiple properties and I've personally guided hundreds of people through the process of buying, selling, and investing in real estate. Andrew Carnegie famously said 90% of all millionaires become so through owning real estate. More money has been made in real estate than in all industrial investments combined. The wise young man or wage earner of today invests his money in real estate. I should add that a wise young woman or an older woman or an older man, or really anyone who is looking for a simple path to riches, should invest in real estate. I can tell you from personal experience that buying real estate is the best financial decision I have ever made. One of my only life regrets is that I didn't start buying real estate sooner. If I was a 16-year-old kid, I would forget about all of life's many distractions and work as hard as possible, saving and investing every single penny I earn to buy my first property as soon as possible. Even if I had purchased just that one property as an 18-year-old right out of high school, by now, as a 45-year-old, I would most likely have that home paid off. That means I'd own a home free and clear, valued at approximately $250,000 to $300,000. And I'd be collecting $1,300 to $1,500 per month in rent, equaling about $17,000 per year. And since rent increases over time, that number would only continue to climb over my lifetime. Can you see how powerful real estate can be? If you want to buy a home to live in, or your first investment property, and your spouse or significant other isn't on board, it's simply because they don't understand the potential of real estate. It's your job to turn them on. Do anything you can. Ask them to come watch a few of my YouTube videos with you. Pass along your favorite book on real estate investing, and tell them how important it is to you to buy a home. My recommendation for those of you looking to buy your first property is to buy a home that you will live in. But there are a lot of options and different types of properties, so I'm going to go a little deeper here. It seems like most Americans buy what we call a single family home. This is just your average everyday property located in a neighborhood where each person has their own yard, and really a place that is designated just for one family to reside. A better option could potentially be to buy a duplex. This is a property that is meant for two families to live in. So in this scenario, you could buy a whole building and live in one side while renting out the other side. The disadvantage is that, unlike a single family home, you'd be sharing a wall with someone. The advantage is that the renter will usually cover more than half of your mortgage payment each month. Here in Utah, we have homes with basements, so you may consider buying a home that has a walkout basement, aka a separate entrance from the exterior. This would give you a similar advantage to owning a duplex. If you live in an area where home prices are crazy high, buying a condo or a townhome may be your best option. But condos and townhomes are usually considered less desirable because you're packed into a smaller property with little to no yard, often no garage, and usually you'll be sharing multiple walls or maybe the ceiling with multiple neighbors. Often, these type of properties also have monthly HOA dues, which will cut into your profit margin. It's harder to make money on these type of properties, so if at all possible, buy a single family home. The first step, the thing you need to do before you spend any significant amount of time looking at homes, is to talk to a mortgage lender, and this is why. Homes cost hundreds of thousands of dollars. So let's say you find a home for $250,000. Do you have that type of money in the bank? Well, don't be ashamed. Most people don't. To buy that home, the bank will require that you put a minimum of 3.5% to 5% down, and then they'll loan you the rest of the money you need to purchase that home. The bank or lender will look at your credit score, your job history, your debts, your tax returns, and a whole lot more. If they feel good about you, they'll proceed with a loan. So, to buy a $250,000 home with a minimum down payment of 3.5%, you need about $9,000. That means you'd still owe the bank about $241,000. Now, of course, the bank isn't going to lend you that money for free. They're going to charge you an interest rate on the money you're borrowing from them. These days, a common interest rate for a home loan is usually in the 4 to 6% range, and the rate you get depends on several factors like your credit score, your down payment, and market conditions. Most banks or lenders will require that you pay them back in 30 years. So they'll make some calculations and come up with a monthly payment. I'll talk more about this a little later. Now, you could choose to live in this property, or you could rent or lease out the home. If you choose to lease the property, you can usually charge the renters more than what your monthly payment is to the bank. So your monthly payment would be approximately $1,400 per month, but you could potentially charge the renters $1,700 per month. That means you'd be making an additional $300 per month over your mortgage payment. In the real estate industry, we call this cash flow. This is a very good thing. You have two options here. You can pay that additional $300 to the bank each month to pay off the home quicker, or you can put the money into a separate account to help you buy your next property quicker. Cash flow is great, but it's only a small part of the formula to make you a millionaire. There's something much more powerful at work here. Have you heard the word equity? It's one of my favorite words. Equity is the difference between what your home is worth and what you owe. After only a few years, your home could easily be worth $300,000. Remember that you bought it for $250,000. That means that even though you only put down $9,000, you now have about $60,000 in equity. Isn't that incredible? Do you think you could duplicate that in the stock market? Well, most people can't. This is why real estate is considered one of the safest and easiest ways to become a millionaire. So not only are you building equity, but you're also getting cash flow. Can you believe how easy it is to become a real estate investor and to make money in real estate? It's easy and anyone can do it. I'm actually shocked at how many people aren't doing it. And once you're cash flowing one property, it's easier to buy a second and then a third property and so on. As a matter of fact, when you're done watching this video, you'll want to watch my video, The #1 Secret to Building Wealth, where I teach my 310 real estate strategy to becoming a millionaire real estate investor. I'll put a link below. Now, before I continue, can I ask a quick favor? Will you please give this video a thumbs up? I would appreciate that more than you know, and that thumbs up will help others see that this video is helpful. Thanks. Okay, so the top real estate investors know how to buy low and sell high. The best in the business won't even consider buying a property if it doesn't fit within their strict criteria. You're probably wondering what that percentage is or what the profit margin should be. Well, it's different for everyone. I'm fine making a little less on the purchase of the home if I know that I can kill it on rent. But the savvy investor will make multiple lowball offers until someone finally accepts one of them. If you want to speed up the process and make great money as a real estate investor, you'll need to learn how to accept rejection. You'll need to practice patience in searching for the best deals, and you'll definitely want to make sure that the home is worth more than what you paid for it. Don't forget to subtract realtor fees from your profit margin. Yes, realtor fees can feel heavy, but a great agent is worth every penny, especially if you're putting in multiple offers. You'll also need to act fast, as I mentioned earlier. You'll need to be pre-approved with a lender so when you find the right property, you're ready to put in an offer immediately. When it comes to real estate, time is always of an essence. Okay, now going back to your loan. Have you heard the acronym PITI? PITI is principal, interest, taxes, and insurance. PITI are the 4 parts that make up your monthly mortgage payment. Okay, so each month when you make a payment, part of that payment will go towards principal, which helps you pay off the loan faster. Another portion of that monthly payment will go towards interest, which is the profit the bank makes by lending the money to you. Another portion will go towards your taxes. The bank wants to make sure you're paying your property taxes so the county doesn't put a lien on your property. If you don't pay your taxes, the county could take your home away from you. And the bank or lender will also require that you have insurance on the home. Why? Because they're fronting a lot of cash and want to make sure that they get their money back, even if you burn the house down. The process of getting a home loan and coming up with a monthly payment is actually fairly complicated, and I'm not going to go any deeper in this video. If you'd like to take an in-depth look on the home buying process, check out my video, Everything You Need to Know Before You Buy a Home. I'll put a link to this video below. I should also mention that the bank will charge you fees known as closing costs for each home that you buy. Often, I'll get the seller to pay these costs for me, but that cost sometimes falls on me. And once again, it's just part of buying, selling, and investing in real estate. If you don't really want to deal with renters, there's another great option called seller finance where you buy the property and after 1 year of renting it out, you can seller finance the home. It's kind of like a rent-to-own program where you become the bank, and it can be very profitable. As a matter of fact, we call it rent on steroids because it can quickly accelerate your path to becoming a millionaire. Be sure to subscribe to my channel because I'll most likely do a video here in the near future to show you just how profitable seller finance can be. Was there something in this video that really stood out to you as being helpful? If so, what was it? Please let me know by commenting below. If you have any questions or if you feel like I left something out, please help the community by leaving a remark below as well. Sincerely, I want to hear from you. And if you know someone who's ready to buy a home or start investing in real estate, please share this video with them. For more great real estate videos, please hit the subscribe button below. Also, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to ring that little bell below. It'll make you feel good.